Is it not important to promote funds through sustainable development? Is it not important to invest the funds under green projects? Yes, friends, green projects. What are these green projects, which I will be discussing later on in my slides? Under the growing strain of natural resources, climate change concerns, and ineffective investments under green initiatives, the financing gap, yes, the financing gap is much more pressing than ever and ever. What is green finance? Green finance hota kya hai? Green finance is the practice of making investments that have an inherent positive environmental benefits, which leads to attraction towards the financial industry. And under this green finance, investors can get a combined return, that is, the financial return along with environmental benefit. To sustain the growing demand, new financial institutions or instruments such as green bonds and carbon market instruments, I repeat, green bond and carbon market instruments are being established along with the financial institutions such as green banks and green fund. Both these institutions and instrument constitutes green finance. Let's discuss some of the objectives of green finance. What are the objectives of green finance? Green finance is to promote what? Global green growth. But how? Through the harmony between the economy and the environment. To achieve the goal of a low carbon economy, to promote green industry. Yes, friends, promote green industry. And also various projects such as environmental pollution prevention project and renewable energy development projects. We have seen two major key words in green finance, that is green bond and carbon market instruments. Now, why green bond? How the concept of green bond has evolved. Earlier, banks and NBFCs, they were the only primary source of lending for renewable energy projects. But now, these banks have a limited appetite. Why? Because they are weighted down by asset liability mismatch. The long-term funds are not adequately channelized to meet the debt requirement of the renewable energy sector. I repeat, of the renewable energy sectors. There is a dire need to identify the alternative sources to supplement and widen the channels of renewable sector funding. So here comes the concept of green bond. What is green bonds? Green bonds is not just an opportunity to get the return, but also to do good well with their money as well. Under green bonds, the major difference between the green bonds and regular bond is that under green bonds, the issuer's money are earmarked towards financing a green projects. Yes, green projects. What is this green projects? That is assets or the activities, that is business activities are financed towards environmental friendly projects, that is renewable developmental projects, non-renewable and sustainable development projects. Green bonds, they tap funds from specialized bond that focuses on climatic change. Now let's see some of the major benefits of green bonds. As issuers have the commitment towards focusing on sustainable development, so major investment of the green bonds comes from foreign investors. This automatically helps in reducing the cost of capital. Green bonds are also the tax-exempt bonds. This is a major benefit which can be availed by many investors. Now, under diversification of portfolio, what diversification of portfolio? Under this, the investors, along with income benefits, they also get environmental benefits. Yes Bank was the first to raise green bonds in 2015. India has issued $6 billion towards green bond. I repeat, $6 billion towards green bonds. Presently, India's biggest lender, State Bank of India, raises $100 millions. I repeat, $100 millions in green bond. And this is SBI's third iterations of green bonds. Mind it, friends, third iterations of green bonds. SBI has just priced the bonds at 80 basis point over 3 months LIBOR, that is London Interbank Offered Rate, and it is rated triple B, that is triple B by Fitch. SBI Chairman Rajneesh Kumar said it is an extremely important transaction for the country, especially in this critical situation. SBI bonds could also strengthen the country's strength towards international debt market, and SBI's bond sale could be a great benefit towards the global debt market where the company moved towards or moved away because of the currency market turmoils. Adani and Greenco were the first company to raise green bonds in India. What are the carbon market instruments? Carbon market instruments, they are those instruments which helps in reducing greenhouse gas emissions. How? By lowering the carbon content. It also helps to limit the climatic change. But how does it limit the climatic change? By, according to IMA, if the climatic change is reduced to 2 degrees, then the carbon emissions should also fall by 70 to 85% by 2050. Now, to attain the sustainable developmental goals, country needs to specialize in environmental product and services that are environmental friendly investments. Friends, environmental friendly investments. So, by aligning economic policy, comprehensive energy policy demand, and coherent financial regulations could lead to a sustainable financial development. Thank you.